Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. Today as usual we have prepared report. We have tried to make it light just because we have discussed major issues of the recent inflation reports yesterday in the Forex analysis. So this time we just have taken a look at a few moments on the CPI calculation to explain to you why actually CPI we expected should rise in the nearest time. We think that it could start rising right in mid-September when we get the numbers on August inflation. And we have taken a look at some components of the CPI. So first of all, it's purely math calculation. It makes impact on the numbers as well, and in some moments, for example, is the fuel price, which has decreased through the year significantly, but in recent few months have turned up again, and together both these factors will trigger another upward changing in the CPI numbers. That's what we expect. Also, we have taken a look at few forecasts from the big banks and companies concerning the gold price and some other moments. So just light report, so probably you should enjoy it. So speaking on the technical part, not many things have changed. So due to the current situation, market is too inspired with the recent changes in the CPI and still thinking about the soft landing and the Fed pivot points, and it's actually suggesting that probably, well, no recession will be, or it will be light, and Fed will stop rate change and early will turn to the cutting of the rate, which is also talked about in the report. Under this pressure and under the pressure of the rising of the interest yields and treasuries in particular, gold should remain under pressure for some time, as we talked about this, and at least in the mid-September, I suppose. And under this pressure, it could keep dropping further. And that makes us to consider some nearer standing targets and start, well, keep our journey with the failure of this head and shoulders pattern, which we think that is failing, and price should reach some lower standing levels. In particular speaking, our nearest target stands around 1870, 65 area, which is actually COP target of this ABCD pattern. The problem is here, it's mostly tactical, is that market will retest once again the confidence support, which is not just daily, but this is weekly level, and it already has been tested when this first amount, it actually was the background, if you remember, for our long position. We said this really strong level, let's consider taking the long position. Here we've got the minor hand and shoulders, if you remember, the lower time frames, where everything has been done really pretty nice. But now it's coming once back again to this level, and since this is still strong level, despite it already has been tested, volatility should increase around it, and I'm not excluding the chance that we still will get another bounce up from here. If we will get it, since the overall sentiment hardly will change in the nearest time on the gold market, that might be very good background for possible taking the short position. So we could get much better prices for taking the position, and we get lower risk if we consider this point as vital for the short-term bearish context. So we have to place stop somewhere above the C top right there, so it will be significantly lower risk than we consider to what we have right now. And potentially, as you could see on the picture, I'm not excluding that this might be the butterfly, because extension of this BC leg to the downside agrees with the COP target, which is actually 127 extension potential butterfly. That's the scenario that I think we could consider in the nearest time. That's all about the daily chart. On the longer time frame, as on 4-hour time frame chart. As on a hourly chart, I do not see yet any bullish environment. So that's market starts showing response. For the truth's sake, market hasn't quite reached the level yet. So we need to see the performance around 1905, 1910. Also, I'm not exclude the chance that market will touch the XOP first around 19 even, and only after that will start bouncing. It also could happen. So that's been said, somewhere between the 19 even 1910, we will be watching for the bullish response and signs that market really showing the bounce. Then we just follow our training plan with the butterfly. On the hourly chart, you could see also, well, nothing is going on yet. Market stands inside the wedge, and we just still yet to see any reaction on the support area. Those of you who considering taking the long position here, so for some short-term scalp setup or something, if you trade on hourly chart, lower time frame, I suppose that in the current environment, when the gold remains under pressure and overall tendency stands bearish, it is absolutely necessary to get bullish reversal pattern around it. So if you will have some performance like this, do not take the long position, because obviously here we do not have any bullish context. Only if market will form something here. For instance, if I would say market drop lower, complete the XOP, starting sharp upward reversal, forming hand and shoulders. In this case, yes, you could consider taking scalp long with the target, I don't know, with some fib levels that you could consider, calculate the extension of the hand shoulders as we usually do. So maybe butterfly will be from something, but you have to get the patterns on your back before taking long position. It's vital in the current situation, because if weekly pattern will not be strong enough, hardly market will show any bullish patterns here and start just keep dropping to the target, which is around 1870. And if you will take position in current environment without any patterns on your back, you just will get significant drawdown, which is not really good. So that's why it is necessary to get a clear bullish context on the longer time frame for considering taking any long position. That's what we have currently on the gold. Let's see how it will turn.